Good morning, trade pros. Welcome to Morning Market Update for February the 27th, 2020. This is George from Trade Pro Academy. I hope you guys are having a great day, and we got a great morning for you. Markets are moving, and it's going to be a great day. If you're looking for the short, if you've been buying the dip, it hasn't been very forgiving for you this time around. But we got a lot of time in today's Morning Market Update, so let's get started. Hope you're doing well, YouTube. New low, yeah, absolutely, Forex Black. We just hit a 10% correction low at the 57s. We just broke below it. So let's talk about the coronavirus update. Japan and China have now closed schools nationwide. All right, and that's a pretty dire act. South Korea confirms 505 new cases of coronavirus, which surpasses China for the first time ever, which that becomes a super bearish thing or negative event for the market because this started in China. Our long view has always been on the market that if it remains in China, the market will probably be contained and could even rally. If it spreads outside of China, the market will sell off. Here it is, 505 new cases. For the first time, a country has more than China. All right. It's very interesting. The next question becomes, when will the Federal Reserve step in to bail out the big money? All right, because it is a bailout at the end of the day. Federal Reserve will come out, could possibly even do a round of stimulus. They are now buying bonds, $60 billion a month. When you buy bonds out of the market, you give the market cash. It's essentially giving liquidity out on a monthly basis. So they said that that's going to end in Q2. If we continue to the downside in the markets, there's absolutely no chance that they end that program in Q2. They're going to probably actually buy more bonds and provide more cash. Repo this morning was subscribed pretty much 120% of what they were offering. So overnight lending is also continuing. More and more cash flows flooding into the market. At the same time, the 10-year U.S. Treasury hit below 1.3% for the first time overnight ever. All right, that's historic. So now the pressure's on the Federal Reserve. When we look at the Fed numbers, I pulled them. The next meeting for the Fed is March 18th of 2020. All right, the current interest rate in the United States is a range of 1.5 to 1.75 points. So 1.5 to 1.75%. And let me just turn off the Bluetooth. Then I'll cut off my audio. And so get this. Just as far ago as 1 month, there was only a 7.9% chance, according to the market, that they cut interest rates on March. Remember, the Fed was going to hold. They did a midterm adjustment. We're not going to cut rates anymore. We're going to be long-term. And the next move could even be raising rates. Then what happens? Fast forward to a week ago, that's up to 8.9%. Yesterday, it was at 33%. We now have a 54% chance that the Federal Reserve cuts rates on March 18th, making borrowing less costly, all right, in an attempt to stimulate the economy. This is their acknowledgement, or the market's pricing in, rather, that they're going to want to see a rate cut. It gets even better. April 29th, there's a 90% chance there's a rate cut by April 29th of 2020. So as you can see, this sell-off in the market has really scared traders, and they're looking for the Fed to cut rates. All right, there's a 41% chance there's half a basis point, or not a half basis point, 50 basis points, half a percentage point cut. And the rate on April 29th of 2020 could be 1% to 1.25. All right, that's ultra low. So, markets are stepping up pressure for the Fed to start cutting. Will the Fed help them out? We don't know. But this coronavirus situation is starting to get out of hand. A few people have called it a pandemic. All right. In fact, Australian Prime Minister Scott Morrison said there's every indication that the world will soon enter a pandemic phase of coronavirus. That's a pretty strong statement. All right, but it is spreading. The market's concerned. And if you've been long for the last 10 years, what are you going to do? You're going to take some profit. What does taking profit look like? What's an order that you put into your platform? Sell. And so right now we're just dumping sell stops from longs from below, and also longs at the top, the retail crowd that got stuck inevitably at the very peak of this move. Now we're heading lower. Crude oil is absolutely getting crushed down into the 46 handle, and mid 46 is almost. That's a massive slide below support structure that was in 2019 and 2018. S&P now on overnight lows, continuing to slide as well. A lot of bids below. This thing could get really ugly today. We can go and test that 3,000 handle on today's session. A lot of downside taking place here. All right. We also just hit the 10% correction level, meaning that when markets drop 10%, it's called a correction. It's not a bear market officially being downside until it drops 20%, but we're halfway there. All right. And the question is, will the Fed step in and save the market again like they did in December of 2018? I could expect to see more pressure for it. Markets overnight in Asia, Japan's down 2%, Hong Kong's flat, China's flat, India's down 0.4%. Europe didn't have a great day at all across the board. London down 2.1, Paris down 2.3 so far, Frankfurt down 2.5. Futures in the United States down almost a percentage point across the board. NASDAQ just tested its yesterday low. S&P 500 is far below it. We are now also close to the 200-day moving average. Below there, we got a lot of sell stops. All right, I'd love to give you some kind of reassurance if you're a bull, but I think we can continue to the downside, and this thing can get really ugly. Crude oil is down 2%, actually more than 2% now. Gold is up, and Bitcoin is down 4% to the high 8,000s. And I'm really starting to see. I had a question before a couple of weeks ago on Bitcoin. Actually, not even a couple of weeks, a couple of years when it first started, but a couple of months ago is when it got to be a really serious question. When we have the next recession, will Bitcoin go down with it? Meaning that it's a risk asset, it's risky to hold, and therefore all risk assets get marked down in a recession? Or will Bitcoin be a safe haven the money goes to once they sell everything else that's risk? Get out of stocks, they're risky. Where does that money go? Usually in gold, the dollar, and the yen. Right? Will Bitcoin be another one of those things that's considered safe haven hedge? All right. So far, the answer looks like no, because it's correlating with equity performance. It's not a good thing. So you know that as a Bitcoin trader, keep that in mind when an actual recession or if these markets continue to slide takes place. All right, durable goods orders this morning came out slightly more positive than expected. More positive by the way of being actually less negative than expected. Expectation was minus 1.5%, came out at minus 0.2. The previous number was 2.4. So we beat the expectation of a really low number, but we are far below the prior number. All right, and that's not a good thing. GDP Q4 came out, that's solidified. There's no real expectation for changes. The fourth quarter's passed. We already know what happened in the fourth quarter. Trying to look for future events and things that could reflect the future of the economy, because that's where the uncertainty is. But, GDP got shrugged off, 2.1% in line with expectation. Jobless claims, more people filed for jobless claims this past week, 219,000 versus 212 expected. And so that's not good. 10 a.m. we have pending home sales. 10:30 we got natural gas inventory. 11 Kansas City Fed manufacturing survey today. A couple Fed speakers. And 4:30 we have money supply on the Fed balance sheet coming out. All right. Looking at the calendar, options expire on the 13th. So Thursdays tend to be bottoms of weeks. And that's just information that over years of experience, and we may get a little bit of rebound to close on Friday. If you look at the market and how it's looked, it's absolutely just been disgusting. There hasn't been any dips. If you've been buying dips, you've been getting slaughtered. All right. And so, we've been down now 1, 2, 3, 4, 5, 6 days in a row of negative gains. Think about this, just 6 market days ago. So a week and 1 day. All right. We were trading where? Pop quiz. All right. The high was 33.39 quarter. Current print is 30.59 3/4. All right. It's actually 30.55 3/4. And so we're down nearly 300 points in 6 days. That's a significant ass kicking for the stock market. And so it's all driven on coronavirus. Today, you're going to have the temptation to want to buy this dip. And I'm going to tell you to fight that temptation and go with the trend. Sell rallies until we flush out some of that inventory. I think we could go all the way down to 30.34. That would be a good print, another 20 points lower, and then it's any man's game at that point. You have to evaluate real-time information. Careful having a bias and holding it for all day. You're going to get destroyed that way. All right? Allow the bias to form in real time, not to have one that coming into the market with already. Okay? The real time right now is saying sell rallies. Pick a resistance up top, sell it, ride it down, get paid. You guys, I love you. Have a great rest of your day. And I got to hand it over here to Steven, talk about oil, and then Victoria to do equities. Join us in the trading room. Very proud of the team. We've done very well during this market downside. And this is what the passion was behind funding TradePro or founding TradePro Academy, is to help people in these type of markets succeed. Everyone makes money when the market's going up. There's a saying, don't confuse bulls for brains. The market's bullish. Everyone feels smarter than they really are. They're not smarter, more educated than they really are. And the markets drop 10%, 300 handles in 6 days, and then we really find out who's a trader and who's not. All right, so be careful out there. That's all I'm trying to tell you. Thank you guys. Have a great day. Appreciate you all. 3048 is the 200-day moving average near end. Yes, that's correct. And we're pretty damn close. So let's see how that holds support. Below the 3048s on the S&P 500 futures, got big sell stops below that 200 MA. All right, see you guys tomorrow. Love you all. Be careful. Have a great rest of your Thursdays. Join us and trade in the room with us. Take advantage of a community of successful professional traders on a daily basis. It's where the action's at. All right. Take care. We'll see you tomorrow. Goodbye. Love y'all. Ciao.